and welcome to today's video, which is called Calm Before the not storm, but further advance in equities. Is this conclusion or opinion supported by actual data? Would I find something to pick forward with? This is the subject of today's video, so let's dive into the actual situation as it stands in the markets. Such was the situation yesterday pre-market, following Monday's steep ascent, pre-market consolidation. Clients know that I have called for two realistic targets to be achieved. Only the first one was for now. So how does it look following the price action seen unfolding today? Running correction, pattern of higher highs and higher lows, which actually favors not too steep downswings to occur, and that had been what I had been saying in yesterday's video. I will be linking to it, so you will have the opportunity to examine it in appropriate detail. Market breadth, does it give any kind of warning signs? No, this is honestly just a consolidation, and the downtick in advanced decline line or advanced decline volume is nothing to be fretting about. Actually, it's a good sign that yesterday's candle was dodgy, while the percentages of stocks trading above, namely shorter periods of moving averages, have been nicely consolidating, not getting too overheated, and that's the key to the health of bull advance, that it is not just the same names that are taking equities in a certain higher direction. And we will see that exactly from the sectoral overview in the next few slides. But for now, this view as well shows that while stocks are not yet completely above the 50 demarcation line on the 200-day moving average or the 51, the situation is slowly improving, and while at amber light this is not yet in no way red. It's slowly waiting for when we get the green light, because there is more fuel in this rally, and the only question of risk-reward ratio is where to get in on the long side in case you prefer to be trading in and out of it. Such was the sectoral view following Monday's close. Nothing to pick fault with. I've covered that in yesterday's video. Thank you for liking these videos and subscribing to the channel. Turn notifications on to be shown exactly new stuff whenever it goes up. So, such is the view following Monday. Discretionaries outperforming staples, financials doing way better than utilities, tech cooperating, defensives very tame, price gains very tame, and communications with discretionaries and tech are doing well, joined by financials and industrials. This might not look that positively, but still these sectors have outperformed on a daily basis, and those four declining ones have been and are the defensive ones, which just tells you that within this daily doji, equities had been actually risk on under the hood. So that's positive. Same for US dollar, which is continuing its tepid retracement higher, and best of all, it's not dependent on rates rising, as you can see from the following chart. So that's positive. Same for euro dollar, which is continuing its tepid retracement higher, and best of all, it's not dependent on rates rising, as you can see from the following chart. So that's positive. Same for euro dollar, which is continuing its tepid retracement higher, and best of all, it's not dependent on rates rising, as you can see from the following chart. Note how well my midweek call had panned out, and ever since prior Wednesday the US dollar had started its ascent. This is the yields chart, and it's even more so risk on that defensives do not do well even if yields are stable or a little retreating. Another chart, gold, correction, absent momentum, not tanking, but it's a correction in time rather than in price at the moment still. Is it time to be chasing it higher? Only for very patient traders, or rather investors than traders. I would prefer to get actually a sign of buyers returning to the market. Unlike in silver, where the chart posture is much better, and we all know about the end of March publicized buying attempt targeting paper shorts, and the momentum, those flows are returning into the white metal, and the highs on this chart will be easily overcome, and then some more. So silver is in favor, and you know as well the copper chart and its relative absence of deep setbacks lately from which it would not recover. Oil had been respecting my 68.50 and then surged over it by $1. Is it a trend change? It was spurred by positive services PMI numbers which had supported the move, and thus far, no matter how tired the buyers look, the sellers have not yet returned, but I expect oil price to return south just when yields would start cooperating by retreating as well. So that is still in the future. Finally, Bitcoin mirroring a bit the move shown in Nasdaq. It's waiting time. However, strategy, news and price action do favor bullish resolution to the current consolidation. I would not say and not look for bearish interpretations of any wedge-like structures here. Crypto will be benefiting at the moment, and the risk on turn is not yet spent. In equities, no matter how shallow progress it is making, it is still making progress, and the upside technical target has not been reached. So, such is today's video. Thanks for liking and subscribing to the channel.